Is a trade war on the horizon?
Nice to be here. I don't think it is. I think what we're seeing is a very tough negotiating position by President-elect Trump and his administration. We had Trump, of course, the first time round. I think it is a different type of presidency we're likely to see, maybe a little less chaotic. But I think in terms of the tariff element, it's going to be a negotiating tool. And the reason I say that is because, tariffs are a tax on your own people. And this is a president who's been elected on the basis of bringing down inflation. People have been fed up with higher prices for so long. So again, I think he's got to go fairly easy in terms of what ultimately is struck. But certainly right now, it does appear to be bringing people to the negotiating table, which is exactly what he wanted.
But this is an inauspicious start if he's looking at 25% tariffs on what should be trade allies, Mexico and Canada. And the narrative is he wants to stop immigration, he wants to stop fentanyl as well, and he's lumped China into that category. It's going to end, or is there a pathway to fully fledged 60% tariffs on China? And if that did materialise, then we're talking about stagflation and recession.
Well, I think if that were to materialise, we're probably talking about a global recession. If we really get into a trade war, and even worse than that. We've seen for the last 100 years, trade restrictions by and large have been lifted. We've seen globalisation, we've seen prosperity, we've seen poverty alleviated. All the things we know are beneficial from free-flowing trade. Growth is stimulated by that. So certainly any kind of tariffs I see as a regressive step. I certainly feel he looks at the numbers in terms of goods balances and says, look, there does seem to be a misalignment here, and he's going to do all he can to, I think, tackle some of that. But as I said, the US consumer is what really matters. His standing with the US electorate really matters to him. And therefore, I don't think that he can have anything like the 60% tariffs plus in China, plus 10, 20% elsewhere. That, as I said, is a tax on his people who have voted for him. So I think, again, there's going to be compromises met, bilateral deals struck. And at the margin, I think still global growth is going to be reasonable going forward, but probably favouring the US against other parts of the world.
Let's bring in the consumer, and you mentioned the two-thirds of the broader economy. Taxation policy, we still haven't really seen the contours of that. Perhaps we will post-inauguration January the 20th. But with Scott Bessent at Treasury, a fiscal hawk, Trump doesn't seem to have a problem with blowing out the deficit. The two are not going to see eye to eye on this issue.
No, I think not in terms of the rhetoric that Trump has been showing in the election trail. But I think, also he's very much conscious of the fact that he doesn't want the US economy nor the financial markets to be really under a great deal of pressure. What we've seen since his election, and again, it wasn't so much a surprise about Trump himself getting in, but the clean sweep that he's had, I think the markets were concerned, are we going to see the deficits balloon further? So far, we've seen, again, the bond yield move up. So it's an indication of the financial markets telling him, look, you might want to do these things that you're talking about, but the reality is if this becomes inflationary in combination with the tariffs we're seeing, then the markets are going to put a limit in terms of what he can do. So I think watching the bond market, looking at what's happening in terms of Fed fund futures will give us some idea of what the direction he's likely to take will be.
On balance, do you think we are in for a meaningfully stronger dollar environment and a meaningfully higher rates environment?
I think notably higher. And the reason I say that is clearly up until the election outcome, the view was very much one of, in my opinion, a great normalization. Inflation was coming back down towards targets. Interest rates were being eased globally once the Fed had started doing that. That was a pretty good environment. Since then, of course, we have seen a fear that actually a higher inflation dynamic will mean the Fed will have to cut rates less. We're seeing that in money market pricing. And as a result of that, I think, yes, that does mean the dollar is likely to remain higher for longer. And with that comes the implications for the currencies that are either pegged or linked to the dollar, and the economies elsewhere in the world that we're hoping to see interest rates coming down. I think there's going to be a bit of a rethink of that, certainly in the next few months.